Good afternoon, ladies and gentlemen. We are happy you have joined us for Bigbank Investor Webinar. Today, we are hosted by Bigbank Chairman of the Management Board, Martin Länts, and the Member of the Management Board, Argo Kiltsmann. We will start the presentation with an overview of Bigbank and its public offer of subordinated Tier 2 bonds, and then continue with a live Q&A session. If you would like to ask your question to the company during the presentation, please use the Q&A section. The presentation in Zoom menu by clicking on the Q&A button. Gentlemen, I am now handing it over to you.
Thank you. Nice to meet you all here. I'm glad to start the presentation of Bigbank Tier 2 bond issue. This is the second issue from our 35 million euro prospect, which was approved last year by Estonian Financial Inspection. And also last year in September, we carried out the first emission. In total amount, it was subscribed over 22 million euros, and we issued the bonds in an amount of 20 million euros, and they are now already listed also on the Nasdaq Baltic bond list. This presentation today here is, of course, like advertising information. Your investment decision must be done based on the prospect, amendment, and of course, based on all the financial reports and information provided by Bigbank on our public website or on the Nasdaq Baltic News. The bond emission is happening in all the Baltic states, so it is possible to subscribe in Estonia, Latvia, Lithuania, and it is not allowed to subscribe from US or countries like this. Few words about the presenters. I'm Martin Länts. I'm the chairman of the management board, and I have been working in Bigbank since 2013. From 2019, have been acting as CEO for the bank.
And hello, my name is Argo Kiltsmann. I'm also member of the management board and the CFO of Bigbank, and I've been working in Bigbank now almost 11 years, so quite similar amount of time compared to Martin. So been here a long time, and head of finance area since 2017 and member of the management board since 2019.
So also the short overview of Bigbank operations. As you can see from the map, we are today operating in 9 countries. We are actively providing loans in Estonia, Latvia, Lithuania, Finland. We also do service existing loan portfolio in Bulgaria and Sweden, but in these countries we currently don't attract new loan customers, but we service the existing portfolio. And we do accept deposits from Estonia, Latvia, Finland, Sweden, Bulgaria, and also we have cross-border operations in Netherlands, Germany, and Austrian market. And the cross-border operations means that if in Estonia, Latvia, Lithuania, Finland, Sweden, and Bulgaria we have our own offices and we have the local branches available, then in German, Netherlands, and Austrian market we operate on a cross-border basis. And if you have such a license for the operations, you cannot have physical employees working from these countries, but these people are serviced from our service center in Tallinn. Our total assets as of Q3 2022 were over 1.5 billion euros. We have more than 130,000 customers. Our loan portfolio is over 1.2 billion euros and deposits also over 1.2 billion as of the Q3 2022. And all the services are provided by a little bit more than 500 employees. If we look at our legal structure, then we have 2 private owners who are Estonian persons, Barbara Brunsild and Vahur Vol, who both own 50% of the shares. The Bigbank AS is Estonian company, and as said, we have the branches in Latvia, Lithuania, Finland, Sweden, and Bulgaria. We also do have some subsidiaries. One part of the subsidiaries, all Rüütlimajad and its subsidiaries, managing our real estate investments, both in commercial real estate and also agricultural land. We do also have some farm operations, but this is something we are planning to exit during 2023. And we have also some companies which have been providing for the group the incasso services, but at the moment they don't have active operations. And if you look at the product portfolio, then we have two product lines. One is corporate banking, another is retail banking. For the retail banking segment, we do offer all different types of loans. We do provide housing loans, consumer loans, hire purchase. We also have from start of this year in Estonia available credit cards. We do provide car leasing and, as said previously, also the deposits in two types of products. Saving deposit, which is quite similar to the demand deposit, so it can be taken out quite quickly after the application within 2 days, and classical term deposits when the customer fixes the term for example, 1 year, 2 year, 5 year, 10-year period. For the corporate banking segment, we do have investment loans, development loans. We also do some unsecured small loans, of course, car leasing and equipment leasing, and we also do provide deposit products. The corporate banking is active in Estonian, Latvian, and Lithuanian market, while the consumer financing and car financing for the private individuals we also do provide in Sweden. And as said before, we also do manage the existing portfolio of consumer loans in Sweden and Bulgaria as well. If you look also on the timeline, then we have for an Estonian company quite a long history. So the operation started quite in the start of also the Estonian when it was possible to start the operations. Then we expanded to Latvia, Lithuania, started Finnish branch, cross-border operations. We also did have a branch in Spain for 10 years. We do have our own banking program, Nest, which development was launched in 2016 and which has now ended. Of course, we do develop it further, but one of the key strengths, I think, for us is this, that we have our own built banking platform, which enables us to provide new products, new services to our customers, and which oldest parts have been built, as said, in 2016-17, and in that sense we don't have any legacy systems, which makes the operations really efficient. In 2022 we also got Moody's long-term deposit rating Baa3, and as said before, had a successful T2 bond issue on Nasdaq Baltic bond list. So this is the quick glimpse into the history of the bank, and now Argo, maybe you will tell a bit about the financials.
Yes, sure. Let's look at the financials quickly also. Here you can see a lot of numbers, but important parts are taken out in the right side of the slide where the peak growths are taken out. So I shortly guide you through this. You can see in these 4 columns our 2020 audited results, 2021 restated results, and a 9 months comparison from 2021 and 2022. You can see really big growth numbers there in regarding total assets and also loan portfolio. As also taken out, 64% was a year-on-year growth in loan portfolio in 9 months 2022, and versus 2021 versus 2020, it was 55%. Asset growth also very big, 50% and 50% numbers. And if we look at now profit and loss statement main figures, you can see that the interest income has increased in 9 months 21 from 57 million euros to 69.6, which is 22% growth. Here the reason why interest income isn't as much grown is that we have concentrated now more and more with lower interest income products. Our focus products are now more corporate banking and housing loans, which also are the main basis for our growth numbers in loan portfolio. And if you look at the net profit figure, then yes, in 2021 9 months we earned 23.1 million euros, and in 2022 9 months 21.3 million euros, which you can see is a slight decline. But in 2021 there was a substantial effect from one time like business transactions, meaning we purchased agricultural companies, 2 of them, which benefited us immediately. And if we deduct these from 2021 and also we deduct revaluation profit from real estate portfolio, then the difference is 3 million euros. So if we deduct these 3 million euros, we can say that actually from our main business, our loan business, profit has even grown compared to 2021 9 months, over 6%. Return on equity, which is maybe the most interesting like ratio from the below section, we can see that yes, in 9 months 2021 the number was 18.7% and it has dropped to 14.7 in 9 months 2022. So there is a decline as well, but it is also reasoned by the same like one-time effect I talked about, the net profit. So if we deduct this, then the difference is smaller. And in 12 months 2022, we can already say that if we look at the very soon at the profit numbers as well, and actually the return on equity is bigger than 14.7, initial figure around 17% in 2022 12 months. Next slide, loan portfolio. Let's see how our loan portfolio distributes between different, like say, aspects. Geographically, our biggest part of our loan portfolio comes from Estonia, 38%, and Lithuania, 34%. Next comes Latvia, 15%, and then Finland, Sweden, and Bulgaria is only below 1%. If you look how it is distributed between retail banking and corporate customers, then roughly say 2/3 and 1/3, corporate banking part has grown rapidly, and now it is already 1/3 of our total loan portfolio. And if you look at how our loan portfolio is secured, then we can see it's roughly 50-50, meaning that 50% of loan portfolio is roughly secured with real estate and 50% is still unsecured loan portfolio. Yes, secured with real estate, mainly all the corporate banking part and also the housing loan part, and unsecured loans, yes, of course not secured by real estate. Here also the growth numbers on the graph as well. You can see that loan portfolio has yes grown over 50% in 2021 and in 9 months 38%. And loan portfolio quality is actually in recent several years only improved. Our non-working portfolio part has decreased, and in 9 months 2022 it is under 2% level. Deposits. Yes, how we finance our loans, of course, it's deposits. And as Martin told, we have 2 main deposit products, term deposits and saving deposits. Savings deposit part has recently grown more, which is basically, yes, as a demand deposit. Customer can quickly put in the money and quickly take it out if he likes to. rates therefore are smaller, and this is very interesting and popular product in our cross-border countries, Germany and Netherlands. And you can see that savings deposit portfolio has grown more, and now it is not half of a deposit portfolio yet, but 540 million euros savings deposit portfolio and 700 million term deposit portfolio by the end of third quarter 2022. And geographically speaking, yes, these cross-border countries give us most of our deposit portfolio. Germany, Netherlands mainly, 46% Germany, 38% Netherlands. Rest of the countries give already less. And yes, you can see from here that the maturity breakdown shows that savings deposits are the most popular ones, then the next 6 months, 12 months, and so on. So more and more going towards the savings deposit product in deposits. And also now let's have a quick look at our 2022 12 months results. Here I must state that yes, these are preliminary, these are not audited, so these can change a little, but I hope they are quite the same numbers which will be presented not later than 10th of March this year. And you can see that our profit compared to 2021 restated profit has also increased in 2022 12 months by 2%. If we deduct all the real estate revaluation profit and also this single time purchase profit, what I talked about before from 2021, when actually our net profit from lending business is actually grown even 31% compared to 2021. Here are our loan portfolio graph in 12 months 2022 as well. You can see that the growth in the last quarter of 2022 continued. We had 50% year-on-year growth there compared to 2021, and the majority of the growth comes from our focus products, corporate loans and housing loans. Home loan portfolio has increased in 2022 more than 3 times, from 72 million to 225 million euros, and our business loan portfolio has more than doubled. It was 228 million in 2021, and now by the end of 2022, it was 473 million. There was a growth in consumer loan portfolio as well, but it was not as significant as it was in these other 2 product lines. Deposit portfolio, of course, continued the growth in the last quarter of 2022 as well, mainly still, yes, from savings deposits. The gap is let's say, decreasing between term deposits and savings deposits. And saving deposit growth is already also not 2 times, but from 341 million in 2021 to 622 million in 2022. And the term deposit growth was smaller. With that, I will give a word over to you back, Martin.
Thank you, Argo. So here is an overview of our 2022-2026 strategy. The first strategy year has ended. And in general, I'm also quite glad to kind of state that at least based on the first year experience, the strategy fits well our strong growth ambition. Our goal is to be growth oriented. We clearly want to be the most customer focused bank. We aims for 20% return on equity. As Argo said, that the preliminary result for 2022 was around 17% ROE. So hope to improve it also in 2023. If you look where, based on the strategy, the main growth should come from, then it should come from housing and corporate loans. And if you listened Argo, then also 2022 fast loan portfolio growth has actually been exactly from these two product lines. At the end of the year, the corporate banking loan portfolio was over 472 million euros, and the housing loan portfolio over 200 million. And these two products have been also the reason for the really fast growth 2 years in a row, over 50% loan portfolio growth. How we do it is that we try to provide our customers with reasonable product conditions, and here we don't have in mind only the interest rate or contract fee, but also the small print in the agreements, the additional covenants, so that actually we would understand customer risks well, we would manage reasonable risks, and also from customer point of view, the terms would be reasonable. What I think Bigbank has been good in is that we always try to find also underserved customer segments or some niches. For example, one thing is this our special schedule for the housing loans, where customers, for example, in Estonia can pay up to first 20 years only the interest and principal plus interest the last 10 years. At the same time, when we talk about risk taking, then still the solvency evaluation we do in the format that we take today's customer income, and we do evaluate if the customer can make the payments after 20 years for the principal and interest. So actually it's quite a conservative approach. We also want to be the risk leaders, but not the risk leaders from the point of view that we would always take the biggest risks, but we actually try with each and single customer to really understand what the risks are there and whether we do have reasonable mitigation techniques, both from bank side or also from the customer side. And of course, we provide excellent customer service. We also try to be the fastest. So if a customer makes an housing loan application to Bigbank, then we try to be able to actually do the final decision already the next day, so that the customer could go to the notary. Or if we talk also about large corporate loans, then we have the internal rules that within 24 hours, if all the materials are provided, we need to be able to make actually the decisions. The second pillar in our strategy is talking about IRB, internal risk-based approach for the credit risk evaluation, so that each and single loan would actually get the capital risk weight on a single level and not as based on the standardized approach which we use at the moment. Why it is important is that in such a way for the good customer, for the good collateral, the risk weight could be lower, and the differences between the standard risk approach or the internal risk-based approach is, for example, in housing loans, it can be more than 2 times. So based on one contract, you might need to put 2 times less capital if you have good customer, if you have good collateral. But it's a long and clearly regulated road. So we hope that the first year we could take it into use is actually 2026. Until that, it is preparatory works, and also it can be done only in case you get the approval from the local regulator. Then we do also some real estate investments. So we have our commercial real estate portfolio. We do have our land investment loan portfolio. If we talk about agricultural land, then we do look for long-term value growth. If we talk about commercial real estate, then we look at objects which have a strong cash flow, strong tenants. We also do consider investments into the green energy, either than placing some solar panels to the commercial real estate we own, or, for example, we have also made agreements where we do cooperate with windmill developers, but in such term we talk about renting land for them and also earning part of the energy production income, but not investing ourselves into the windmills. And last but not least, from the 4 pillars is entrance to the daily banking. Why we want to do this is that it clearly helps to tie customers stronger with us, which improves the marketing efficiency, but also allows to provide the bank with cheaper financing, because today our financing, as also Argo showed, is based on the saving deposits and term deposits. But here we always talk that we pay some interest for the customers. If at the same time we look the large universal banks, then they also do use for the lending actually the retail banking customers' salary money, which customers use also every day to buy milk and things. But in such case, usually the interest is not paid for such a money, and it's a cheaper place for financing for the bank. First steps we have already done. We have the first 24/7 product available for the customers in Estonia. From January, we offer the customers the ability to apply for the credit card, which allows 24/7 international payments, and it is done in cooperation with Visa. Other long-term objectives are that we invest a lot into the development of our leaders so that they would be able to support our employees to grow, to achieve their results. We do want to build a sales and business-oriented culture. Of course, we do investments into improving our brand considerations. We mainly grow organically, but we do also consider non-organic growth. We scale the products among the countries we do operate, and the banking platform Nest provides an excellent opportunity for that. We do use lean and technological investments to build up the processes which provide higher value for our customers, but also for the employees. Climate neutrality we take as an opportunity, not as a restriction. Probably there is a lot of possibilities to develop some new products, find some new customer segments. And of course, in order to achieve expected return on equity, we need to be also cost efficient in our operations. So this is a quick glimpse in our 5-year strategy. Now, if you talk about capital requirements for the bank, then from 15th of March, the capital requirements will be 17.73% in total. And if we compare it to the previous capital requirements, then the annual review done by the regulator called the Supervisory Review and Evaluation Process, based on which the regulator is also deciding the Pillar 2 capital requirement for the bank, remained on the similar level as in previous years, meaning that all in all, the financial inspection is evaluating our risks on a similar level. Where we do see some changes in the requirements is one is this discretionary counter-cyclical buffers. These are the buffers decided by the local central banks. For example, from 2022 December, there is 1% counter-cyclical buffer established in Estonia. Then last summer there was 2% buffer requirement set for the housing loans in Lithuania. So this is based on the different countries, and as an average it affects our portfolio with 0.46%, while in previous times it was 0. And the other requirement which is raising and which has been also, I think, through the media, is that the regulators are establishing additional Pillar 2 capital guidances, P2G. which in the previous times it was 0.5%, and now it's on a level of 1.5%. And in total, as said, our capital requirement raises from 16.24% level to 17.73%, which means that also for ensuring sufficient capitalization for the same size of loan portfolio from 15th of March, we do need more capital than previously. And that is also one of the reasons for the bond issues we are doing. We are doing the public T2 bond issue happening now, and also we are planning at the end of first quarter also to do the closed 81 bond issue. And the other part of the additional bonds we do use for financing the growth of our loan portfolio, because we also do believe that in 2023 we will continue the growth, maybe not on the similar speed as of last 2 years, where the annual growth rate has been over 50%, but as our corporate banking loan portfolio, as our housing loan portfolio is also rather young, meaning that we are just building it. And if you talk, for example, about housing loans, then they are usually given out with a schedule 25 to 30 years. So the annual payments received from the customers, we also do believe that in lower new sales will be bigger than the return from existing loan portfolio, so total portfolio will grow, and for that we also do need additional capital. And then Argo maybe will give also the short overview of the terms of our current bond issue.
Yes, sure. The conditions are actually pretty much the same what they were in our first series of this 35 million program. 8% interest rate. Now our issue size is 5 million euros, but we may increase it up to 15 million. If we increase it to up to 15 million, then our total 35 million program will be also ended by that, because the program is then full. Of course, the one nominal price of one bond is continuously 1,000 euros. And important is to take out that we have coupon payment frequency quarterly payments, which means that first interest payment date with this series will be around 16th of May, 3 months from the issuance of this series. And we continue, of course, with quarterly payments throughout the period. It has maturity of 10 years, but important here is that early redemption date is starts after the 5 years of this issue of this series, meaning that we have a right, and if Estonian FSA will allows us to do it as well, then we can redeem these after 5 years from the issue. But the overall maturity is still 10 years, so you cannot expect that it will be bought back by us after 5 years, but we have a right to do it. And I think with that, I covered the main points of terms. So
maybe, yeah, like the main comment, why often the T2 bonds are called back by the banks before the 10-year maturity is that from the regulatory perspective, you can take as a capital the full amount of the T2 bond up to or all the first 5 years, but after 5-year period, bond for the capital requirements coverage will start to amortize. It still means that for the bank, it is the interest cost is on the same level, and also for the investor receives the interest for the full amount. But as a bank, you can take it into use as a capital requirement each year after 5-year period, less and less, so that by the end of 10-year term, it would be actually taken into account as capital only, like €0. And that's why usually as the capital in such way will be more and more costly after each year, after the 5th year, then often the banks do the early call of the bond. And yes, this is the final slide of the presentation. If you have the questions now, feel free to ask. We are also available through the email investor@bigbank.ee. So if you have the questions later, but now feel free to ask any of the questions you are interested about. And if you wonder how to do it, then there is this QA panel.
We have now received one question. Perhaps I will read it out for everyone, and then you can decide who answers. Could you please explain the reasons of closing the loan issuing in SC and BIG?
Martin, would you like to answer, or do I?
Yes, I can answer. So yes, as said, also previously, and then which can be also read from the prospect, is that we did stop issuance of new consumer loans in Sweden from September 2022, and in November in Bulgaria. What was the reason is that as you also saw, like we are owned by 2 private individuals, and we have been growing as a bank based on the retained earnings from the previous year's operations. So every year, majority of the earnings are put back to the bank's capital, and based on this capital, bank can grow. As last years, we have grown over 50%, but as you also saw that our ROE is between 15 to 20%, then clearly we do exceed like the portfolio growth in a faster base that we can generate the capital through the earning profit and putting this profit into capital and using this capital as the basis for issuing new loans. Then we have also done the bond issues, which we also did. We have done before the public program. We have also done closed cycles of bond issuance which have been subscribed by LHV pension funds, by Estonian pension fund. First one we did 5 years ago in amount of €5 million. Then we did at the end of 2021 in amount of 10 million euros, and then also in 2022 May in amount of 5 million euros, after which we did public bond issue in amount of 20 million euros last year September. And basically we have been growing so fast that we can all the time put all the free capital into the growth, and basically our growth possibilities depend very much not from our ability to find new customers, our ability to do marketing, but actually also to finance it with the capital. And as of this, we did the evaluation of each and single product's return, and also our expected return for the next 3-year period. So what we see is that for sure the highest return is from the consumer financing provided in the Baltics. Then next in line, thanks to the Euribor increase, are the housing loans provided in the Baltics. Then the next profitability comes from the corporate loans given in the Baltics. Then Finnish consumer loans and car financing. Then came Sweden, and then came Bulgaria. So as these countries' new loans are with the lowest profitability, then currently we do see it reasonable to service their existing loan portfolio. but we don't issue the new loans. And but we still keep also acquiring deposits from these countries. The Swedish deposit portfolio we keep in line with the level of the loan portfolio, for the reason that Swedish loan portfolio and also deposit portfolios are in SEK, so there is a local currency. In Bulgaria, the loan portfolio is bigger than the deposit portfolio, but Bulgaria will go over to euro hopefully in 2024, or this is their plan. Probably it will happen, and then we also turn it to the euro country, and then it might be in a longer term even more attractive also for us to expand there also the deposit portfolio. I hope this answered the question.
Thank you for the answer. Currently, we haven't received any other questions, so I would propose to wait for another minute or so, and then we can proceed. Okay, it seems no other questions so far. I would kindly remind you that if you still have any questions to the company, please feel free to approach it individually by sending an email to investor@bigbank.eu. From my side, I would like to mention that the recording of the webinar will soon be available online, and please follow Bigbank announcements to stay up to date with company's news, or visit Bigbank's investor page, investor.bigbank.eu. Gentlemen, any last words?
I would like to thank all the participants for coming for the presentation. Thank you.
Yeah,
Thank you.
Thank you.
And have a great day, everyone.
Thank you. Bye-bye.
Bye.